Did you know that few years ago, Intel and IBM was the two companies that had the most patent? And yet, Intel really managed to completely fucked up and destroy shareholder value the next years, and now it's done what? 50 or 60% since all-time high, even maybe more. And the management has changed already 2 or 3 times in the last 2 years, and they have absolutely no idea where they are going. In this video, we are going to analyze the stock to see if the growth that we just saw over the past weeks is able to continue and will continue to grow for shareholders, or if it's a trap and you should absolutely avoid Intel. So before getting into the numbers, we need to understand why Intel have been growing in the past days, in the past weeks, and then we'll see the different numbers, and we'll go on my valuation spreadsheet to see at what price it can be interesting to buy Intel, and we'll do also a reverse DCF to see what the investors are expecting now if they want to have a 10% return with this stock. The first reason and the main reason for now that Intel have been skyrocketing in the last day, okay, it's the biggest 5-day gain in history for Intel. It's because Broadcom and TSMC are exploring potential deal with the chip makers that will split it into two. Okay, so it's an external reason and not an internal reason. That's something important to understand. Also, a week ago, I think, or 2 weeks ago, there was a news that Intel may have created a chip that will be better than, well, not better than NVIDIA or anything, but that will put them in a good position for AI, especially that now they have a factory in the US, so they have good element for this, okay, good advantage for this. So here we are. That's the reason why the stock really skyrocketed, mostly because these people have their potential acquisition from Broadcom and TSMC. TSMC is like controlling Intel factory, okay? So that can make that can be good for shareholders. It depends, of course, on at what price it will be bought. When it's come to numbers, okay, here it's not really nice. We'll see here on FinChat. We can go on income statement. If we see the revenue, we have a decreasing revenue since 2021, and we have lower revenue than 10 years ago. Okay, so this is not really good. It's a CAGR of minus 0.5% per year. So yeah, very not good. Then we can go to net income, and same net income now, 2024 negative. Okay, 18 billion negative. It's first time since very long that we had negative net income. It's supposed to grow back again, but still really not really good. And even if it grew in 3 years, 2-3 years, it will be under what we had in 2015. So yeah, the management really fucked up here. When it comes to balance sheet, we can check, for example, the debt. Okay, if we check total liability, we can see that it's increasing. It's increasing kind of fast. Also, where is the long-term debt? The long-term debt has been increasing in the last 2 years. Now they reduce it a bit, but it's still not what we would like to see. If we go to the ratio, we can look at the net debt to EBITDA. Net debt to EBITDA, now it's over 3, almost 4. So this is not good as well, okay? Before it was kind of good, under 1, but now it really skyrocketed, okay? EBIT on interest expense, we like when it's over 10. Here it's under 10 and now it's negative. So same, we don't really have something good here. And when it comes to same margins, let's gross profit margin decreasing, operating margin decreasing as well. Look, you can see it here. Okay, in blue you have a gross profit margin here. It's decreasing. Operating margin is decreasing. We'll have a look now at the return on capital. Return on invested capital, we can also return on capital employed. It's decreasing, okay? Since 2021, it's really getting down, and it's not really good. Before it was good, and suddenly it became very bad. The reason is bad management. It's really bad management. They didn't go well, and this arrived approximately at the same time that Apple said that they stopped working with Intel. Now they do the M1 chips, M2, M3, M3 Pro, etc. So the moment that they stop working with Intel, it really starts looking very bad for the company. So now let's talk about valuation. So here it will be a bit difficult to do it with net income because, as you can see, the company have a negative net income. So even EPS, negative EPS. So we'll do it with operating cash flow. Okay. So as you can see that the cash from operation now is 8 billion. Okay, 8.3 billion almost. And if we go in ratio and we look at the forward price to operating cash flow, the average is kinda around 9, okay, around 8, 9 here. So if we give Intel a price to operating cash flow in the future at 9, and if we want to do 10% per year, okay, at the price of 25, so now the share is what? 25.7, okay. So if you want to do 10%, you will need to do the operating cash flow will need to grow 19.5% per year for the next 5 years to do 10%, and then the price to operating cash flow will need to be at 9, okay? It have been more around 8, okay? It was mostly under 8, so if we put 8 here, we need to have 20, yeah, exactly 22% growth for the company. So it's easy. If you think the company, Intel, can grow over 22% is operating cash flow for the next 5 years, so per year for the next 5 years, then you can consider buy at $26. Now, if you want to do at least 13, you will do only 10%. If you want to do 13%, you need to buy it around 22.46. But to be fair, I don't want to buy a business with this kind of numbers, okay? I don't want a business with declining revenue, with declining earning per share, okay? And even if we have growth, even if we see a good growth in the future, yet the net income will still not be better than what we have 10 years ago. And I think today on the market, you still really have some good opportunities. You still have some nice stocks where you can place your money, which are safer than Intel. So yes, the risk reward for Intel is kind of, so now not really good, but a week ago, before it grew by 30%, it was kind of fine. We could say, okay, there is a nice risk reward. But now, for me, the risk reward is really not good. The Intel will need to grow way too much. And also, if you look at the past, we were seeing the same thing in 2022, in 2023, in 2024. Every year we were saying, okay, this year was bad, but now they change things and the next year will be better. And every year it was same again. And it never had changed. It was always the same mistakes done, always the management not being good. So I don't know why this time will be different. I hope it will be different. If you're an Intel shareholder, I hope for you it will be different and the stock will skyrocket and go back to a big value. But I'm afraid that we've seen too much bullshit from the directors, okay, from the team. They have not been able to do it correctly. So let's hope they will do it correctly in the next year, but for now, for me, the bet is way too risky. The stock is not a quality stock, okay? It's not a quality company anymore. So yeah, I will stay away from Intel if I were you. I'm personally staying away from this company, and I will, yeah, I think maybe in 5-10 years, if the numbers are really better, why not considering it again? But for now, it's too dangerous.